morning, Mark Soderberg with ADM Investor Services with your morning ag market update. Happy USDA report day. Ahead of today's data, we are mostly lower here across the ag space. Soybean prices right now are the downside leader, off 5 to 6 cents. Meal is off about $3, while bean oil prices are down about 15 to 20 points. Still mixed in the feed grains, steady, fractionally higher in the corn, while wheat prices do range from about 2 lower to 2 higher. Survey estimates show traders do expect slightly lower ending stocks for both corn and wheat, slightly higher ending stocks here on soybeans. The December WASDE numbers usually aren't very big market movers. In fact, in soybeans, we've seen no changes to ending stocks here each of the last 4 years. Corn bulls hope for a repeat of what we saw last year when we saw a 200 million bushel stocks drop, this due to higher exports. We look for a 50 million bushel cut in corn stocks due to higher exports, partially offset by a lower feed usage. I do think we'll see some changes in the soy balance sheet this year. I've got ending stocks up 20 million bushels to 310. This due to lower exports, partially offset by higher crush. I see no changes in the wheat balance sheet with ending stocks there remaining just above 900 million bushels. I also don't expect any changes in corn or soybean productions in Brazil or Argentina, as we still remain relatively early in their growth cycle. However, I would lean higher given the favorable conditions to date. I do expect to see higher global stocks in wheat with higher production in Argentina, Canada, Ukraine, and possibly Australia. The Trump administration, they finally unveiled their $12 billion financial aid package for U.S. farmers hurt by this year's trade war with China. $11 billion is earmarked for row crops, with another $1 billion for specialty crops. Funds are expected to be available by the end of February, ahead of the spring planting season. I think you can make the argument that as a result, farmers might be a little bit more apt to hold on to last year's harvest here, hoping for some sort of a price recovery, and perhaps even plant a little bit more next year than otherwise would have been the case, given the low price, low margin environment we are currently in. South American weather, mostly favorable, widespread rains forecast through the next couple weeks across much of Brazil, heaviest amounts in the south central region in Paraná and Sao Paulo. We'll get another CFTC update this afternoon, which will show positioning as of November 4th. After being net sellers across the ag space yesterday, I suspect money managers are still long about 135,000 contracts of beans, 12,000 oil, while short 90,000 corn, 67,000 contracts of wheat, and about just under 50,000 contracts of meal. After tomorrow's close, we'll get updates from the USDA on the census soybean and grain crush, this from the month of September. The USDA did announce a flash sale of 132,000 metric tons of soybeans to China yesterday, which brings known sales to roughly 3.1 million metric tons, or about 25% of the 12 million metric tons China has agreed or committed to purchase here for the 25-26 marketing year. Corn remains in a tight little range here between 435 and 455 basis March, while right now clinging to its 50-day moving average at 444 and a quarter. U.S. corn does remain competitively priced in the global marketplace. Overnight low in Jan beans, approaching the 1085 level, which is the midpoint between the August low and the November high. We also have a gap below the market between 1063 and 1070, which I think we're going to eventually try to fill. A fresh 6-week low in the meal, while Jan oil is challenging its 50-day moving average. Wheat also range bound. Jordan reportedly bought 60,000 metric tons of optional origin milling wheat. Well, good luck with today's USDA report. I'll be back shortly after 11 with a summary of today's data. Thanks for listening.